Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out bundleselect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With bundleselect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in, Joe Kuchera with Real Estate Radio Live. Thank you for those that are following us on Facebook, streaming live. We try to, just as a reminder, to have the show Tuesday, Wednesday, Thursday, and try to stick to that schedule, although sometimes depending on our guests and who we have coming in, we may change that up a little bit. But in general, we try to stick to a regular schedule for you, the consumers watching us, following the show. It would be typically Tuesdays, Wednesdays, and Thursdays. We try to do it right around 3:05. We try to stick to that schedule. For more information, if something of that changes of some nature, we usually try to post in advance on Facebook for those that are watching us streaming live. I want to thank you, all those that are taking time to follow the show, listen to the show. I really appreciate that very much. And we'd love your feedback as well during the show. You're obviously welcome to offer any feedback, comments, thoughts, and if we can't get to respond to that during the show, certainly do that afterwards. But again, just a reminder, try to tune in, try to keep on your schedule. Tuesday, Wednesdays, Thursdays, we'll try to do this right around 3:05 in case we have some changes in schedules. Sometimes we'll do Fridays, and most of you know we have a regular series show going on right now with Jack Russo, our attorney, that is doing a segment, the show, a series of starting something new in the Silicon Valley. It's about entrepreneurship, startups in the Silicon Valley. There's a lot of interest in that, so we're doing that especially for the consumers as well. But in general, we will continue to bring you the information and education on real estate and everything involved with real estate at Real Estate Radio Live. Before we get started here today, just a reminder, for more information, go to RERL-1518-Fed. Regardless of whether you follow the show on Facebook, social media, we'd love to have you download the podcast. That way you could follow the show and, listen to it at your convenience, when it's convenient for you, whenever you want. And you could do that by going to iTunes. If you just simply type in Real Estate Radio Live, it'll come up. Or you go to our website, RERadiolive.com. Go to Google, type in Real Estate Radio Live. It's all available there for you to download the podcast. Please pass it on and share the information. Lastly, before we get started, if you need to reach me during the week, I get a lot of calls and emails, some texts. It's a challenging market right now for the buyers, people that are in real estate transactions trying to buy and sell property. So I get a lot of text, emails typically during the week, and some calls about advice and information that I could help. So I'll continue to pass that along. If you have any questions about buying, selling real estate, financing real estate, if you need financial planners, if you need CPAs, if you need legal advice, we have all that network of people that could help you. You could always reach out, 408-838-9060. Or you can email Joe at RERadiolive.com. All right, topic today is going to be a couple things I'm going to cover. First, the Fed raises. If you didn't see this already this morning, I knew it was going to happen. I think most people that follow the markets realized that it was going to happen as the Fed had raised the interest rates once again. So I'm going to talk a little bit about that. And then also in the second segment, I'm going to talk about how this really affects someone's out buying a home right now. So if you're out pre-approved for a loan, looking for a home, how does that affect you right now? I'm going to talk a little bit about that. Also, current homeowners, how does that affect you? In other words, you're not out looking for a house, you have one or two or multiple properties, and you're not quite sure if it's too late. In other words, the rates have gone up. Have they gone up too much? And then I'm going to explain a little bit how this whole Fed raising an interest rate affects the market, could potentially affect the market, and what the difference is on how those interest rates are affected right away and on what type of products. So I'm going to cover all that. So to start the show, the Fed raises the interest rate. What does that mean? It means that, and this is confusing to the consumer in general, the Fed doesn't have control over the 30-year mortgage. What they do is they tinker with, raise or lower the prime lending rate. This is the prime lending rate. And so to best describe this would be tied to credit cards, auto loans, adjustable rates. Home equity lines is probably the biggest example to use. Most of you that are familiar with home equity line of credit, they're tied to the prime lending rate. So typically you might get something that the lender will say, hey, listen, I'll give you a $200,000 equity line, and it's prime plus 2. So if prime's at 4% or 4.5%, then it's 6% on your interest rate. It's an adjustable interest rate. So typically on those home equity lines, it's an interest-only payment, and you can pay principal as well. But so the prime, when the Fed raises or lowers the prime, it affects immediately. It affects, or the next cycle, or the next payment schedule, your next statement, I should say. It will directly affect those types of things. Anything with an adjustable interest rate, it will definitely affect. Now, the thing to think about and understand is it doesn't have an immediate effect. Sometimes it does, sometimes it doesn't, on the 30-year mortgage. On the standard residential mortgage rates, it does not mean that it's going to trigger an automatic effect. Some people will get pretty worked up and they'll say, Joe, I understand the Fed's going to raise the rates. Should I get in and lock a rate? Or I'm not looking for a house. How is it going to affect me? The answer is yes and no. It could, and it may, and it may not. So, for instance, today, it's interesting. Before the Fed raised the interest rates, the bonds weren't doing too well on the mortgage-backed side, so rates look like they might get a little bit worse. But then the announcement came out, which is kind of interesting, that the Fed raised the interest rates, and then the 30-year mortgage rates kind of stabilized, and those mortgage-backed securities stabilized, and rates are pretty much the same today as they were yesterday and a week ago. So it's just a perfect example of trying to understand what that means. Will it have an effect immediately? Yes, it will have effect immediately on credit cards, home equity lines, adjustable rates, those types of things, but it will not typically immediately have an effect on the 30-year mortgage rates or the residential, again, the mortgage rates, depending. So if you are a buyer and you're in the marketplace, the first thing I would do is, again, it may not have any change at all, but whoever you're working with, make sure you always have an updated approval. I want to go through a couple things that are really important for people that are out there looking for properties and pre-approved. So hopefully you're pre-approved and not just pre-qualified. Remember, pre-approved is meaning you have an underwritten approval and it's underwritten by a underwriter with the lender that you're working with or the bank that you're working with, validating that you are approved for a certain amount. If you have what's called the pre-qualification letter, or if your lender says, don't worry, I've got you pre-qualified, push back on that. Don't allow them to dictate telling you you're pre-qualified, because that's not going to cut it. Pre-qualified just means that they took a cursory look, a simple look at your paperwork, your documents possibly, and they may not even have pulled credit and said, oh yeah, this looks pretty good. You're qualified for a certain amount. But you don't want to get caught in that trap, so make sure you're pre-approved. So if you're out looking for a home right now, Fed raises the interest rate right now, as of today, no really change at all. But, tomorrow, over the next couple of days, the next week or so, it could change. It could change. And so what's really important for those people that are out looking for a home right now is, are you on this bubble, or are you in an area of a pre-approval where it could make a difference whether the rate goes up or not a little bit on how much you could be pre-approved for? And then the reason I say this, and let me explain a little bit, is let's say you're approved for a $700,000 loan. That's the maximum approval you have right now. And you're approved at a rate at 4.5%, let's say. But if your lender or your banker's working with you, they'll tell you that, listen, this is the maximum loan amount you could afford is $750,000. Or they might say, listen, you have a little room, you could go up to $800,000 or $850,000, but let's just double check and make sure. The reason why this is important is if you're really right on the edge, and let's say the maximum loan amount you could afford is $700,000, you're putting $300,000 down, you're buying $1 million home, okay, just for sake of this example, and the maximum loan amount you could afford is $700,000. If those rates go up 0.25% or 1/8% or just a little bit enough, that might take you out of the qualifying range. Now, it could be that you don't qualify for that $700,000 loan. Well, some people maybe have a little bit of fudge room or maybe some areas, wiggle room in there to work. If you do, that's fine. But if you're a person that doesn't have that, you have to really be careful. That's the thing to watch out for, a red flag that I'll call it, if you're out looking for a home and there is a potential that these rates will keep going up. I've said this for the last 6 to 8 months, or almost I would say at least for the last 6 to 8 months. If you go back and listen to the podcast that I've done anything on markets and interest rates, my take all along is that interest rates are going to continue to go up this year. And forget about what the Fed's doing right now. Certainly the Fed's raising interest rates, and so that will have an effect on the marketplace. But in general, when I say the interest rates are going up, when I looked at the 30-year mortgage, I really think, right now, depending on what your credit score is and if it's jumbo or conforming, there's all kinds of, it's a moving target, interest rates. But let's just say, for example, rates are at 4 5/8 or 4.625, kind of on the general 30-year fixed right now. I do think in the next 6 to 12 months, interest rates will be at 5% or higher. I really do, and that may sound startling or alarming to some people, and that's certainly higher than we had several years ago when we hit all-time lows and we had interest rates in the mid to low threes. So when you think about it, they're up at really about a 1.5%. right now, 1 to 1.5%, which is a pretty big jump in the last couple of years. Historically speaking, still very low. Cost of money, very good. Why is the Fed raising interest rates? Well, a couple different reasons. To stave off the chance of inflation is one of them. There's other factors. This economy has been built up over the last several years on false stimulus with a lot of money, and interest rates, held down falsely very low. And so it's a slippery slope right now for the Fed and the markets, because if interest rates go up too fast, it could potentially play a part in stalling the market and really putting a damper on the economy. Most people know the economy is doing well lately. We're adding more and more jobs. The stock market has done well over the last couple of years. I do think we're headed for a time here in the next 6 to 12 months, I really do, where we're going to take a breather. And also the stock market's probably going to take a breather as well. What I mean by that, I think we could look at some corrections in somewhere between the 10 to 15% range potentially. And the reason I say this, I'm certainly not an expert. I don't follow the stock market. I'm not an investment advisor. I don't do any of that on a daily basis, but I follow markets long enough and well enough during the course of the days, the weeks, and months, and how it relates to the economy. And I do know that the stock market has had an incredible run-up. Interest rates have been historically low. As interest rates go up, we'll see what happens. We'll see if that affects the economy much at all. Historically speaking, again, they're still very low. So the reason I want to summarize this and just kind of go through it with everyone is that don't panic. If you're out there looking to buy a home, rates are still good, depending on the situation. If you're looking at buying new construction, this is something to really think about. Maybe you want to lock in, do what's called a forward lock interest rate, where you could lock maybe 60, 90, 120 days in advance. A lot of builders and a lot of lenders that work with new home builders, that's something you should be looking at. If you are a home buyer out there looking to buy new construction, and let's say the builder says you're in contract and the builder says your home, as we sit here, I think it's June 13th or whatever day it is, the builder says your home's going to be done in 90 days. You might want to look at a forward lock and what that means, if there's a cost associated with it. If you could do it without a cost with the lender or the builder, that's something to look at, because 90 days or 121 days, 120 days, even more, could be a big deal. If you're going to move into a home that is that far away, it could definitely have an effect on your payment. And depending on the loan amount, it could have an effect on your payment, a couple $100s a month. So really be careful of that. And if you're out looking, again, before I take a quick break, just know that if you're pre-approved, make sure you get with the people you're working with and they update that pre-approval. I get concerned sometimes that people are out looking for months and months and they don't think about getting reapproved or pre-approved or freshening that information. And if it goes stale and all of a sudden you find a place, you could be in trouble. So make sure you do that. All right, I'm going to take a quick break and we're going to come back and talk more about how this is affecting a little bit more on the buyers, and then more specifically we're going to talk about how does this affect the current homeowners with your property right now, the Fed raising rates, and home equity lines, and much, much more. This is Joe Kuchera with Real Estate Radio Live. Stick with us. Those that are streaming live on Facebook, stay with us. We're going to take a quick break. We'll be back with you in a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out BundleSelect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004-66902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thank you again for those that are following us on Facebook, streaming live. Just a reminder, after our quick break, we're going to finish up in segment 2. We try to stay on our schedule to be with you every Tuesday, Wednesday, Thursday, right around 3:05 to streaming live on Facebook. We try to keep that schedule for the convenience of people that are following the show, but we don't always stick to it depending on the guests and the times and what's going on. So if you want more information, go to RERadiolive.com. And just a reminder, please download the podcast. That's the best way to follow the show. Listen to it at your convenience. Today I'm talking about, the first segment, I talked about the Fed raising interest rates again. How does that affect the marketplace? How does that affect you? How does that affect the economy? What are we looking at in the next 6 to 12 months? I talked a little bit about that. I started touching on how does it affect the buyer that's out there buying a new home right now, and I don't say literally not a new construction home, but let's say you're a first-time home buyer or a move-up buyer and you're out there looking for a home right now. How does that affect you? I talked a little bit about that, and I'm going to finish up with that and then get more into how does the interest rates rising affect the current homeowner. Let's say you already have a home and a second home, or you have some rental properties. You're already situated and you have a pretty good rate, or maybe there's some things you want to do. So I'm going to talk a little bit about that. So lastly, on the people out there purchasing, please make sure, you'll hear me say this a lot, make sure you're working with the right team of people. Make sure it's the right real estate agent, the lender, and also if you need any help on any other side, make sure you have the right team of people. In a market like this, it's really extremely competitive. And I've said this before, I'll continue to say again, I work with a lot of real estate agents, and it is amazing how there are some of them that get their offers accepted a lot more than others. So what does that tell you? Is it luck? No, it's more than luck. I can tell you I've done this for a long time. This is why you want to set yourself up with the right real estate agent and the right lender. It's more than luck when the real estate team and the lending team gets their offers accepted more percentage-wise than others. And I see it every single day, and it's frustrating. I see the looks on people's face, and I see the frustration. And this is a business, and this is your money. So some people would say, I'm not going to sugarcoat anything. There are some people in the real estate business and the lending business that do it part-time. They don't really understand the complexity of the market. They don't understand the changes, the dynamics of the market. They don't understand the competitive edge. They don't understand the relationships that go into making these deals happen. They don't understand the time frames and how you have to close loans quickly, how you have to be creative, how do you have to bring teams of people together to make it happen. And unfortunately, the bar is set very low in our industry, and I'll say that, and I'm serious. It's set very low. My estimation, I think there's less than 20% of people in both are in the real estate and lending industry that treat this like a business and do a good job. That's a sad statement, but it's the truth. And the reason why I bring that up is that it's really important that you don't just pick someone because it's your friend, because a friend told you, because a relative told you. I just had a situation recently. It's interesting. Spent some time with clients, educating them, getting them pre-approved, getting them all set up. And this happens every once in a while, time to time, and then they'll run into a friend of a friend or a family member that says, oh, so-and-so is a real estate agent now. And, you know, I get concerned, especially with first-time home buyers, when they're working with someone that's brand new, both on the real estate and the lending side. I do, because this is a very competitive market. They're not networked. They don't understand. So my point is, it happens every once in a while. It's sad for me to see people are misled, so they're drawn back into someone because they're willing to, you know, give them more. Or the thing that's even more disturbing to me is they'll make false promises. Oh, don't worry. I'll find you a place. Don't worry. We'll get your offer accepted. And here's what's sad. A lot of the people don't do their due diligence, and they don't even Google these people or look them up at LinkedIn or find out how long they've been in this business, what they're doing, what their reputation is. Before you make a decision to buy a home, sell a home, get your financing, I say this all the time. A lot of people probably think I'm getting tired of listening to this broken record that Joe Cachero always talks about, a more educated, informed consumer. But it's true. Partly the reason why we have a more educated, informed consumer is because there's more information at their fingertips. You could go online. You could enter someone's name. You could search them in Google. You could search them in LinkedIn. You could do, I mean, you could pay a service and find out. You get a background check on people. I don't know if you want to go that far unless you're thinking about dating them or marrying them. But my point is, or doing business with them, why would you leave to chance when you're about ready to buy $1 million home and financing $500,000, $600,000? Why would you leave to chance someone that does it part-time or says, oh, don't worry, you know, I've done this for 10 years and now I'm doing that. Now, there's nothing wrong with someone changing careers. Don't get me wrong. I'm all for it. I think it's great. But when you are new to this market and you're trying to figure out which real estate agent, which lender to work with, you can't take it to chance. Even when you're working with the best agents and lenders, oftentimes you're going to miss out on offers or miss out on deals. And that's the reality. But I could tell you that there is a reason why there are a handful of people I work with that get their offers accepted more than others. So if you're struggling with the agent, if you're struggling to get deals done, let me know. Give me a call. Shoot me an email. I'm happy to make recommendations. There are some great real estate agents out there that do a super job. They do it full time. They're committed to it. They're knowledgeable. They're smart. They network. They're relational, and they'll take care of you. And I just can't say that enough because I see so many people missing out on deals because they're working with someone that's just not quite got what they need to do to help these people. All right, so I'm going to finish up. That's kind of what I wanted to go through and summarize on the side of someone that's out there buying. Be very careful. Make sure you know who you're working with. Now I'm going to talk a little bit for the next several minutes about how does the raising interest rates here, the rates as they go up, how does it affect the homeowner that already has a property? You have a primary residence, a second home, maybe a vacation home, maybe you have some rental properties. If you've been listening to my show for 6-7 months now, I've been sounding the alarm, so I'll continue to do that. These are the red flags for me, ladies and gentlemen, as you listen to this right now. If you own a home and you have a home equity line that's outstanding, I would encourage you, unless you are looking to pay that off soon or pay it down soon, I would encourage you to give me a call and let's look about putting those together, combining the first and second, even if the interest rates are higher than you have now. Don't make this mistake. I see it too often. People will say, but Joe, I got a 3.75 interest rate on my fixed, on my 30-year fixed. And great, good for you. And that's great that you have that. But if you have a $200,000 or $300,000 equity line that's out there exposed to the marketplace and it's tied to the prime lending, guess what? That rate could be 6, 7, 8%. It's probably already 6%. It's going to be 7, 8% in the next year or so. So do what's called a blended rate. I could do it for you. I'm certainly not going to do it right here because I don't have the time, but give me a call and I could go through a blended rate exercise with you. What does that mean? If you have a 3.75 interest rate on a $500,000 loan and you have a 7.5% interest rate on a $300,000 loan, you have to blend those interest rates and those loan amounts and find out what your blended rate is. The reason I bring this up is that a lot of people are surprised when they look at the numbers. The numbers don't lie. They don't. It could be, in some cases, even though you have a 3.75 interest rate on the first, but you have a sizable second with a 7 or a 7.5 interest rate on it, it could be that you're a lot smarter to combine those two. It makes more financial sense to combine those two, even if the interest rates is 4.5 or 4 3/4. I know it sounds funny. I know it sounds crazy, but do the math. I'm telling you, it makes sense. The reason I want to keep talking about this is because I see too many people. I don't want you 2 years or 3 years from now to be stuck with this home equity line that's got a 10% interest rate. Yes, you could go in and fix them. That's true, but the fixed rates are going to be high too. And so that's the big one. Again, if you're listening to this show, you have a home equity line of credit, and you don't have any intention to pay it down or pay it off in the next couple of years, I would strongly consider consolidating the first and second. Second thing, if you are thinking about remodeling your home, adding on, this is a great time to do it. It really is. You might say, that doesn't make sense, Joe. Why is it a great time to do it? Rates are going up. Well, here's why. Because the last couple of years, you've got a huge amount of appreciation in your home. If we're talking about people in the Bay Area and other places that are listening to this show, most people have had a huge run-up in appreciation in their home. What does that mean? You could leverage more equity from your home, and if you wanted to do that remodel, upgrade the kitchen, the bathrooms, do an add-on, now's a great time to do that. It really is. So you could either do that by refinancing, doing a cash out, get an equity line, use the money off that, knowing that you're going to consolidate when that project's done, or you could even look at a construction loan. Construction loans aren't used that often anymore like they are that much because there's other resources, but that's another possibility. It's a great time. It really is. It's a great time to do that. The other thing is, you've heard me say before on this show, with interest rates going up, the other thing, the city of San Jose, and I'm not sure if other counties do this, but the city of San Jose specifically was, I found out today they were mandated actually by the state of California. I thought it was more of something that they did for the goodness of their heart, but I'm guessing not. So you may have not heard about the in-law quarters or the additional detached unit that the city of San Jose is allowing. So homeowners in the city of San Jose limits that have I don't have all the details, but you could go to the website and take a look at it, the planning department, see what the specifications are. But it's something like this. So I think if your lot size is, 6,000, let's call it 6,000 square feet or more, you could add an additional unit onto your property, and anywhere from 400 square feet all the way up to 1,000 square feet, depending on the size of your lot. For instance, if you have a 6,000 square foot lot, they're not going to allow you to put a 1,000 square foot, additional 1,000 square foot unit. If you have a 15,000 square foot lot, there's a really good chance they're going to allow you to put a 1,000 square foot unit on your property. I am a big fan of this, and I would, if I were you listening to this show, I would strongly consider putting an additional unit on your property if you have a good-sized property. Here's the reason why. If your long-term investment views are that real estate is always going to be pretty good in the Silicon Valley, I know there's going to be ups and downs, but there's always going to be demand here. And right now, in general, a lot of these areas of San Jose, it's not unlikely to have $800 to $900 to $1,000 a square foot that homes are selling for. So do the math. If it costs you $300,000 or $400,000 to add 1,000 square feet, either independently or separately on your property, and that in-game, that $300,000 to $400,000 investment nets you $800,000, $900,000, or $1 million. I mean, think about the investment down the road. And there's two parts to this. It's not only a great investment. So if you could do this, give me a call. I could help you walk through it. We could tell you you have to work with the city. There's some things you have to do. I could help you with that. We've done that before. Give you some suggestions. What's the best use of money? How to access money to do something like this. We could help you with that. It's a great time to do it. Here's the other reason why. I was telling a group of people today, it's a great time to do it. Because guess what? A year from now or 2 years from now, the city may retract this. The city may come out and say, you know what? We don't want to do this anymore. We don't have a housing shortage. We're concerned. We have some apartment shortages. Now we don't want to take away opportunities from landlords. I know it sounds funny, but I've seen this before. The city of San Jose is endorsing this program right now. In other words, they're encouraging you to do this. I would go do it. I really would. If you own property that you could do this, I would encourage you to do this. It's a great investment for your property. It's a great investment for the long run. And the last thing is, remember, the city is endorsing it right now, and they're taking this program and they're giving basically with open arms. They're saying, yes, we want you to do it. That could change in a year from now. That could change in 2 years from now, and that's what I'm concerned about, and that's what I would be worried about. So make sure if that's something you want to do or you can do, take a look at it. If you want more information, you could always give me a call. Of course, you know where to find me. All right, just about out of time. Again, just a real quick summary. Real estate, the rates, the Fed raises the interest rates. How does it affect real estate? It certainly will. There was no big move in rates today, but keep an eye on it. The next couple of weeks, we could see mortgage rates go up again. And overall, money is getting more expensive, and you should get used to it because I think we're going to continue to see rates go up over 5% over the next 6 to 10 months. All right, this is Joe Kuchera with Real Estate Radio Live. Thanks you again for those that are following us on Facebook. We always appreciate it. Please share the information. For more information on the show, go to Real Estate Radio Live. That's RERadiolive.com. Thanks again for checking in. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.